Welcome back. This is episode 24 of the ICT Mastery Mentorship. We're finally resuming it after about a year or two. Let me see. When was the last time I actually posted anything? Well, yeah, it's been about 8 months since I last uploaded anything on the ICT Mastery Mentorship. But here we are today on my birthday, October 19th, is when we're going to resume it. In this episode, episode 24, we're going to be going over time-based liquidity. There are many forms of time-based liquidity, okay, because there's many concepts that are based off of time, like opening ranges, pre-market, but I'm not even going to spoil it. What you know right now, based off of chapter 1, okay, because I'm going to put myself in a mindset. I'm going to put my knowledge, or I guess you can say, okay, I can't really explain it, but put my level of knowledge at yours right now. That's if you're a beginner, okay? So for right now, what you know, just based off of what you learned so far, is kill zones and previous daily highs and lows. That's it. That's all you know for right now. So why do we say previous daily highs and lows are time-based liquidity? Because what is a day? It's a form of time, right? It's a measure of time. How many days make up a week? 7. So we're using a measure of time, which is days. We're using 7 days to calculate, a week. You get what I'm saying? So daily candles can be levels of liquidity. In this case, the previous daily candle, which is this right here, previous candles low and previous daily candles high, can be used as liquidity. Very, very simple, right? But stuff like this, just this daily candles low right here, that's not time-based liquidity. You're probably like, but how, JJ? It's still low. Yeah, it is, but it's not in close proximity to price. Okay, that is its own low. You get what I'm saying? So, like this down here, this is its own low. This is its own low. Reason being, it's a key low that's formed on the daily time frame, and it's not like it's going to be used the next day as the previous daily daily low of liquidity. So when we say time-based liquidity on higher time frames, we mean the previous candle. That can be the previous weekly candle, previous monthly candle, previous daily candle. Doesn't matter. But when we say previous, we mean the candle right before the current candle that we're actively trading in. Anyway, that's just one form, and that's very, very simple. I don't think I need to go over that any longer. Anyway, the kill zones. This is where things get little fun to watch the manipulation and the expansion happen. Anyway, let's get straight into it, shall we? So, liquidity, highs and lows. Very, very simple, right? Asian is highs right here. Well, it marks it for us automatically. I don't even think I have to touch it. Asian high is right here, as you can see, it automatically marks it. And Asian low is right here, automatically marks it. Very, very nice. As we can clearly see, price violates Asian low first. What's that? It can be manipulation, right? Yeah, it can be manipulation. So it drops below the low. And also, let's jump to the daily. Watch this, right? Watch this. Drops below the previous day's low, which is sell side liquidity. Let's go back. We can see that right there is the previous daily candle's low, or sell side liquidity, okay? It drops below Asia's low and past the previous daily low. So, if our narrative is bullish, in which we can clearly see that price jumps higher here, we can expect this to be what? Manipulation, or a liquidity purge of what? Sell side liquidity, exactly. Now looky here. Here we have London high right here. See that? We have London high. And then we have London low. We fail to go past London low. What does that mean? We could see price jump higher. So what's happening now? We can see price finally displace. We manipulated, now we can finally see the displacement of, the bias that we have on the day. That failure swing comes in, it tries to come down to London low, fails to do that during London lunch. Guess what? Right when London lunch ends, jumps higher into the London high and begins to seek the Asian high. So reminder, we've left that high up here as what? Buy side liquidity. Whoa, see that? You put your thinking caps on, because look here. Let's go over this again. We check out Asia low, previous daily low. London picks in and actually, takes out that daily low. But we leave London high here, London low here. We fail to break London lows. What does that mean? Price can go higher. But why? Why is it going to go higher? To seek buy side. Where is buy side? London high, Asia high. Whoa, see that, right? And then we even have equal highs up here. We got a bunch of highs just accumulated up here, just stacked on top of each other right here. So just this Asian high alone is enough, but if you want to stack on top of these highs, you can do that too. But when you implement time into liquidity, it supercharges the actual level of liquidity, okay? So it's not just your normal level of liquidity that will be, I don't know, this right here. Well, no, that right there is actually pretty important because it's a previous daily low. But you get what I'm saying. Or this low right here, that low, it's still a low. It can be used as liquidity, but it's not as significant as, you know, the London high or the Asian lows. You get what I'm saying? So once you implement time into your liquidity concepts or just the concept of liquidity in general, it supercharges that level of liquidity that you identify with time. That's why you can see how price refers and uses these levels of liquidity so significantly and so with such, I guess you can say, importance. You can see how price is like, oh, we got to respect this, we got to do this, we got to do that. It values the level of liquidity. That's the word. That's what I was looking for. It values these levels of liquidity because guess what? Time is with it. Now, as I've taught you before, in which did I teach you that? Because it's been a lot. It's been a while. Yes, I did. Time and price. As I've taught you before, price cannot move without time. Okay? Price cannot move without time. Price cannot move without time. I'm going to say this one more time. Price cannot move without time. Got it? So once you put both of those concepts together and understand that time and price work together, price being liquidity, time being kill zones, once you put those two together, it supercharges the levels of liquidity, causing price to react to it in such a significant way in which the algorithm will value it more because the algorithm runs off of what? Time. Whoa. Now, this is just one day, obviously. We can clearly see that the narrative was bullish just based off everything that happened in hindsight, of course. And we can clearly see that once New York kicked in right here at 9:30, we consolidated a little bit during the first, during AM and lunch. And then once PM kicked in, we began to jump higher, giving us about, from here to here, about 370. Really? That's 370 points? That's crazy. That even shocked me just now. Anyway, let's go to another day. Here we are, right here. So we got Asia low, Asia high, London low, London lunch high, London lunch low. You get the point. You see what's happening here. So we can clearly see that the kill zone's highs are being purged. This is causing a what? A buy-side liquidity purge. But pay attention to how price is moving along those highs. Do you see price really, really pushing through? Like, for example, if we turn this off, right? Do you really see price jumping up and just jumping through the screen? Do you see that? No. It has a lack of displacement. It's purging buy side, but it's doing it very slowly. And that's what causes it to be a purge because it's not running through it. Remember the difference? Liquidity run and liquidity purge. Get it? You're starting to see what I've been teaching you, right? So a liquidity run, I'm going to keep that in, by the way. A liquidity run would be price just shooting through the screen and going through it like it's the target for the day. But it's not doing that. It's manipulating. How? Just look how price moved along Asia high. Well, I don't even have to mark it because I marked it right here. But just look at this, right? We come up to it. We go past it very, very slowly. We just inch our way higher. And then even for London high, look at London high. It goes up really slowly. It takes like 5 15-minute candles to do it, which is like an hour and 15 minutes. It takes an hour and 15 minutes just to reach that high. Well, no, starting from here, it's like 2 hours. So you get the point. Price is having a lack of displacement going higher, causing what to happen? Manipulation. And what? Liquidity purge as manipulation. Okay. Now, if price was shooting through the roof, I'm not going to sit here and say it's not manipulation. It can still do that, but it's just having the confluence of price moving slowly and having that lack of displacement while it's purging buy-side liquidity just gives that confirmation or that confluence of saying, oh, price really wants to go lower because it is struggling to push through these highs. You know what I'm saying? And even here, look at London lunch. If I can zoom in, London lunch high here. We almost just getting abused here. We could barely get past it. Just jumped up, dropped right back down. Jumped up, dropped right back down. Jumped up and dropped right back down. And it just kept going back and forth, back and forth. And then around here, wherein 9:30 kicked in, we jumped higher once again above this short-term high here. That's a short-term high there. You will learn what a short-term high is in the future, I promise. Matter of fact, in this chapter, you will learn what a short-term high is. And it comes up, and then at 10 o'clock, or in the middle of London close, it manipulates and then drops lower for the day. Pretty nice, isn't it? Really, really nice. But remember, we have a bunch of sell-side liquidity being built up down here. You got Asia low, you got London low, you got London lunch low, which is already marked. So, what is happening here? What is actually going on here? If I can mark this as sell-side liquidity, and sell-side liquidity. What's happening here, excuse me, I had to burp because I'm talking a lot, but price is purging buy side and accumulating sell side. What does accumulating sell side mean? Do you know what the word accumulation means? Let's search it up. Accumulation. The acquisition or gradual gathering of something. That something in this case is liquidity. So we are accumulating or gathering liquidity. So whenever I guess you can say the narrative is ready to be delivered, or the bias on the day is ready to be delivered, it can run through the gathering of sell-side liquidity. So it's purging, or nullifying, if you want to say, it's nullifying buy-side liquidity, getting rid of all of the buyers, okay, getting rid of all of them, okay? Or matter of fact, inviting buyers into the marketplace. They're like, oh yeah, price is going up, yeah, buy. 930 kicks in, offers that manipulation to those buyers by jumping above this short-term high. Oh yeah, it's going higher. Yeah, let's ride it up. Oh no. What is going? Well, no. And then their stop gets hit. That's the funny part. It's so hilarious to see how the algorithm works and to really read price like this, because once you understand how the market works and how the algorithm really functions, it's freaking hilarious, bro. I swear to God. Anyway, you see what's going on here. Price is purging buy side, getting rid of all buy side liquidity, and inviting buyers to manipulate them later in the future, in which it does that right here, to then take out all the sell side liquidity that's being gathered or accumulated here within what? There's a word. In time. Time being what? Asian, London, or lunch. Or if you said kill zones, you're also correct. And guess what? Price violates all those lows. 1, 2, 3. Boom. Just had to add the boom sound effect. I might start adding sound effects to my YouTube videos, but no, I'm not going to do that. Anyway, one more example, and I'm going to end this here because I do not want to make this too long. I don't want to make it too long, yeah, man. Should we do this day here? Let's do another one. Let's do one that's like pretty far back. We can do this here. This is fine. This is fine right here, mate. Alrighty. So, we got Asian, London, London lunch. Simple, right? Right off the bat, Asian high gets purged. See that? When I say purge, look how slowly it took out Asian high, which is right here. That's Asian high right there. It took it out. It struggled to go past it. Matter of fact, it didn't even attempt to go past it. The farthest it went past it was 3 points. So I wouldn't even consider that a struggle. It just didn't go past it, period. So it used Asia high to then come back and violate or purge Asia's low during London. So this is something called liquidity engineering. You will learn this in the future. But price purged Asia high right here. Purged Asia high. It come back, took out Asia low. Respected, not necessarily respected, but yeah, it purged the low, showing a willingness to, displace away from that low, creating a liquidity purge, and then it jumps higher during London. Now we have London low and London high. Then we have London lunch also, so keep this in mind. This low down here, if we want to see price jump higher, just based off what's going on here, back here in Asia, let's mark this as sell-side liquidity, because we can clearly see that price is manipulating heavily. It manipulated Asia high, or purge Asia high, to then manipulate and come back down and violate Asia's low to purge it and to jump back higher during London. So now we've created that swing up, and now we have a bunch of fair value gaps, order blocks, a bunch of reference points that we can refer to, right? Right. So price might want to retrace to the optimal trade entry of this level. If we look, it does. It does do exactly that. So it retraces down to the optimal trade entry of London, fails to break London low. What is that? Is that an indication to go higher? Yeah. We could potentially see price go higher. It doesn't mean it is going to go higher from here. So we have the respective optimal trade entry. Matter of fact, almost all optimal trade entry levels. Then we have the purge of London Lunch low with the matching of this relative equal low right here. So we got the purge of London Lunch or relative equal lows that merge into London Lunch lows. We see that get purged with the respect of optimal trade entry and the failure to break the London low, which is right down here at sell side liquidity, in which we see price kick in here at 9:30 and jump higher. Wow, pretty nice, isn't it? And guess what? All those optimal trade entry levels or the deviations, they got hit. Absolutely beautiful, beautiful trade. If you were to actually take this, but I would teach you in the future to trade this a different way, like on a 15 second or something like that, and we'll hop in that in the future. But is this the end? Yeah, this is the end of episode 24. Very quick video. Anyway, this is, like I said, the end of episode 24 of the ICT Mastery Mentorship. I hope I taught you this well. Hope you can use it when it comes to these rigged, very, very rigged markets. And I'll see you guys in the next episode. Good luck and good trading.